We have CNBC contributor Vince Farrell, Chief Investment Officer with Solai Securities. We have Michael Pinto of Delta Global Advisors, Kudlow and Company contributor Jerry Bowyer of Benchmark Financial, and Stephen Abrams of Bryden Abrams Investment Management. Stephen Abrams, I must begin with you. Not only did the market soar, but your favorite hard-felt picks, commodities, basic materials, and energy just got slammed. And I want to know, is this a one-day wonder or a 3- or 4-day or 5-day issue? Or is this something that investors now must take very seriously? Are we about to rotate out of the big winners for a long time, namely the energy and commodity stuff, or not, Stephen? This is a huge question.
Larry, you need to go back and look at some editions of this show over the last 4 to 6 weeks. I've been telling you ever since that time that the global economy is slowing down, that the commodities and the commodity-related issues we're all going to get slammed. It was going to be a very difficult period. We've sold a huge number of these. I do not, however, think this is permanent, because at some point, and it may be some months away, as the global economy begins to re-accelerate, as commodity prices have backed off and as global central banks begin to stimulate, whereas they've been tightening recently, then this trade will be back on. But for now, indeed, for the last 5 or 6 weeks, it's been off. There's no question about it.
But what makes you think they're going to come back? You just said the world economy is slowing. Well, the world economy these things don't just stop and start, Stephen. In other words, you're either in there or you're not. You're either in a growth period or you're not. If you believe that the world economy is in a slump, then you know that slump's going to last for a year or longer. I would think you would be telling people to get out of commodities for the foreseeable future.
Well, first of all, it's only a slowdown. It's not a slump. Secondly, I'm not sure how long it's going to last. We'll let the data tell us. But longer term, I'll give you one statistic according to McKinsey and Company, and that is that between now and 2025, 500 million Chinese will leave the farms for the cities. Okay? And that doesn't count the rest of the emerging economies. So I would say to you, for now, the commodity trade is dead. There's no question about it. There's more money to be lost there than gained. But some point down the road, I say months, you say a year, who knows? We'll find out. We'll find out. We'll find out.
I'm just surmising on this, and anyway, I'm not sure. Jerry Bowyer, what do you make of this commodity slump? Is it a permanent thing? Should people be getting the heck out of commodity stocks? Is the global economy really crashing down, as per Stephen? And by the way, if all these Chinese, Jerry, if all these Chinese move from the countryside into the cities, they're all going to die of bad air, aren't they? I mean, they're not going to be much of a factor, just like the Olympics, which worries me a lot. But in all seriousness, this commodity rotation is a huge story. I want to cover it today. The Fed was on neutral. They gave no hint of tightening up policy. Right. So, Jerry, what do you make of it? Energy getting slammed, commodities getting slammed. We're going to put some charts up on the full screen. It's interesting. Commodities, short run, yeah, they're getting killed. But longer run, we really haven't broken through any of the resistance points. Jerry, where are you coming out on this very important portfolio strategy point?
All right. Well, if the Chinese all move from the country to the city, that's a good thing, because they're going to want to vote. And that would probably be good for China. That's where democracy usually starts. That's number one. Number two, commodities. Go back to your Julian Simon. The normal path for commodities is downward. And we seem to have gotten ourselves so confused now that we think the normal path for commodities is upwards. And so now we're wondering if we're going to break the normal path. I mean, for 200 years, the normal path of commodity prices is downward. Now, that doesn't mean commodity producers can't be profitable through higher volume, by becoming more productive, by being more innovative. You can make money with companies that produce these commodities, but the actual price of the stuff over the long run, except if you have natural disasters or bad government policy, and we've had a whole lot more of the latter than the former, commodity prices, the unit price of commodities tends to fall over time. So I bet on that.
So the 5-year boom is over. Is that what you're saying?
The commodity 5-year boom?
Yeah.
Yes, I think it is.
All right, well, Vince Farrell, 5-year commodity boom.
But that doesn't mean the global boom is over.
Is it over?
It's over.
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 It's completely over.
That chart you had of the long term is really interesting to me, Larry, because it shows, yeah, you're just back to that long-term resistance. But I think that this trade past couple of years is so popular, being long commodities and short financials, it's not going to end very quickly. I think that the commodities have much further to go on the downside with fits and starts, and I think the financials bottomed in July and are going to do very well.
Let me go to commodity charts. We got CRB chart, if I'm not mistaken. That's probably the best one. Let's get off the oil for a second. That's a little bit different. We also have a gold chart because we've got a short-term play and a long-term play. Please continue, Vince. We'll pick it up as we get them on the full screen.
Larry, I think those charts that we're going to pull up are going to show exactly what we're making here is that we have retreated a lot. But, you know, this year, oil, for example, went up, I think, from 70 to 140 over the past year, but the stocks did not. And now the stocks are collapsing along with the commodity price, and I think they probably are going to go further down. They're cheap, but they're going to get cheaper. And I was wrong before. I sold out half the position figuring the cheapness would hold in. But you want to be away from these things right now because this is going to start to feed on itself. The 200-day moving average for oil, which is my favorite commodity, is like 109. I think we're going to get there very quickly, and then we're going to bounce around and try to figure out where to go. But you do have, and Steph and I agree with you, a slowdown in the world economy, which is going to take the edge off of the commodity desire. You also have seemingly the geopolitical not being quite as ominous as it has been. A lot of noise about Iran doesn't seem to be affecting the oil market as much as it used to.
This isn't about Iran. This is about drill, drill, drill.
Oh, it's absolutely about drill, drill, drill.
The latest convert to the drill, drill, drill movement, which was started right here in this program, is none other than Senator Barack Obama. I believe we have some sound on Obama's conversion to drill, 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 which may have helped push oil down again today. Take a listen, folks.
We can and should increase domestic production of oil and natural gas. Right now, the oil companies have 68 million acres of leases